Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Thick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Hope everyone had a good weekend. Welcome to this Monday morning edition of Benzinga's PreMarket Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. Got a good show for you folks today. We're going to talk about the continued trading range in the S&P futures. Some good articles and barons over the weekend. Some stocks again, the barons pop and drop. A couple earnings as well to discuss. Not a whole lot going on in ratings land today, but we got two guests for you, and it's appropriate. We have a cryptocurrency expert on today because Bitcoin did hit another all-time high over the weekend. So we're going to be joined by Reggie Middleton. He's a digital currency expert and the founder and CEO at Veritasium and the Boom Bust blog. He's going to join us at 8:15. Then at 8:35, we're going to be joined by Craig Johnson. He is the managing director and technical market strategist at Piper Jaffray. Joel, how are you doing in the spoos, and how's your weekend?
Weekend was good. Saw a lot of lakes here in the Detroit area. I guess we just can do a snapshot on Friday on how the market is doing. Putting together 13 straight closes within that range, and the middle of that range is holding up as the low. 72 even, that's our low, trading up $1.50 at 73.5. The high at 77.50. That matches Friday's high. Just go to the dailies here. All kinds of support and all kinds of resistance here. Basis the daily chart, you could see how we're just consolidating near all-time highs. Look at those tight ranges. Moving on to the crude oil market. Now, crude is trading in the red, and you look at your dailies on this one. Try to get through $50, but look at that. 3 of the last 4 highs in the upper 49 handle. So $50, huge level once again. And gold and silver are both in the red as well. Gold in the red by $1.50 at $12.63 even. And silver inching its way back towards $16 even. Good morning, Dennis. I thought I read somewhere that today's a day off in Canada. What are you doing on the show?
It is a civic holiday in Canada. Look at that. I don't even get my 8 holidays anymore because you make me work the U.S. holidays. And yeah, so when I have the U.S. holidays, Joel says I have to trade in Canada still.
Wait, Dennis.
And obviously the Canadian holidays, I still have to trade in the U.S. So I don't even get holidays.
What holidays?
I don't even get the holidays. No rest for me.
What's today? What day is today?
Civic holiday, they give it. It's the holiday in Canada because they don't have another holiday in August. So everybody wants a holiday every month. So we just have a civic holiday, which is just like, okay, we'll just give you a day off because there's no holiday in August.
What about the duck? Does the duck have to work today?
Yeah, the duck always is working. The duck was in Amherstburg. You could have went down there. Actually, it was in your neck of the woods there, just south of Detroit. There, you could have actually drove down probably just to around Monroe, Michigan. Probably saw it across the bay.
Nice.
It was in Amherstburg this weekend.
Oh.
Do you know anybody that went and saw the duck? The $200,000 60-foot duck?
I know, but I think I would have went just to get a photo of it. But
you should have went. I should have told you. It was down there. It was close to you guys.
All right, you ready for the spoos to break out of this trading range here, Dennis?
Ever. Is this going to be there forever?
Forever?
I mean, Nick Shaheen must just be raking it in with all of his option writing there because we don't go anywhere. I mean, individual stocks we do, but on the overall market, if you were just writing calls and puts, you're just raking it in, Joel.
Yeah.
That is like, just sell premium. That's all it's making money right now. Sell premium, especially in the spoos.
Yeah, well, we'll have Nick on tomorrow, back from his vacation, to get his updated strategies and see where he's writing his nets, puts, and calls. But this, I just mentioned 13 closes within that 6-point range, trading right in the middle of it. So hopefully, so things will get heated up soon. But let's go to let's go to the markets here. And we had talked about not a whole lot of individual news, but you were talking about follow through moves. From Friday. So
I want to talk Teva first of all, and this just goes to show you. We'll say it again: when stocks cut the dividend, it's tough to be saying and come in there and buying them because this when we got the news in the pre-market show, and I forget who was, informed us of that. Obviously, the news was out there, but me and Spencer then dug, because when you're doing a live show, it's hard to, obviously, when it's breaking news between 8 and 9, and we're doing the live radio show, if something does break, it's hard for us to continuously watch the monitors and speak and, watch our stocks and trade and do all those things. So we appreciate the chat when they come through in the clutch and let us know. And somebody did know, I forget who it was, about the Teva dividend cut that it was announced during, I think it was it Friday's morning show or Thursday? It would have been Thursday.
Yeah,
morning. Thursday morning show. And the stock was trading around 25 and a half, 26 bucks. And it's just been straight down since. And now we're under 20. Actually, we just bounced back up above 20 here this morning, but we were actively trading in the 19s. You've got another downgrade. Morgan Stanley chasing price here today, downgrading the stock to underweight here. I mean, this is just a disaster story. We know the company's laden with debt. It feels like another Valiant to me. That's what I was saying a couple days ago. That's why I keep saying. That's why when I started analyzing this company back as a potential investment at 28, I was like, I don't know. I was looking at that debt, and it kind of felt like it could be like a little VRXy. And I think that's the problem here again. They just, too much debt. And, obviously that's why they got to cut the dividend here. And the stock's going straight down, probably. Not great earnings, but that debt is just, holding the price down.
All right, holding in here, down 54 cents at 20.06. We dipped under 20 in the pre-market, and like I say, 1957. That is your pre-market low, and you held there for a couple brackets. So, great place under 20 bucks to cover a short. Not sure where I'm looking for a long yet, if I'm ever looking for a long in this issue. But you can see the pre-market action. And I just want to bring up a monthly chart here, Dennis. What's no better example than Seadrill? Remember how Seadrill was going down. And I think he went to 35 to 30, 30 to 25, and then 25 to 20. And then
they cut the dividend.
Then
it was over.
Yeah, then it's over, and now it's 33
Never came
cents.
back. Now, I don't know if it's over for Teva. A little different story here, but the debt is scary. So they need to start figuring that out. And they're addressing it. I think on the conference call, they were talking about addressing it. So, we know Valiant was in trouble there, but they started addressing their debt, and they're a little bit out of trouble now. I mean, the stock still is not great there. And, it's funny, people say, let's go back to a show a month ago. And I was starting to say at 17, 18, this thing was starting to get a little lofty and wouldn't chase it up here.
Remember that?
And everybody was fighting me. Remember how many?
Everyone was mean to Dennis.
Everybody was giving me hate for that. Even on Twitter, I think I said something. And people were hating me on Twitter and saying, why would you not like this company now? Look, the chart looks great. Well, you know what? It's back at 15 here. So sometimes, it just doesn't pay to chase. And I think, I was saying if it ever got back to 14, where that old resistance point was, maybe I'd take a shot. That looks like it's possible here now. And VRX is trying to turn around. They're trying to get that debt down. So I might be interested in this one at 14 if it continued to come down here. It's been a pretty hard sell out the last few days.
And staying on this subject here, Fuzzy's asking about Mylan. And there's certain stocks that you automatically look at when, at least for me, going back over, the years, the pairs, maybe not hopping on the hot rod. But I remember looking at Mylan. I'm like, I wonder how Mylan's going to react to this news. And there you go.
It's paired up.
Yep.
MYL moves with Teva. So, similar generic drugs. I don't think the debt load is as bad. Full disclosure, I actually do own some Mylan in my investment portfolio. I wish I didn't, obviously, after. But, some stocks you're going to get hit on when you own 100 stocks in your investment portfolio. But anyways, this one's down here again this morning. It's a mess, too. It's Teva's kickstarted this one, and the chart is ugly on this, too.
Well, this got kickstarted with the old fake, with the EpiPen controversy. And that was quite a while ago. The stock did recover. Very important for it to regain the former lows of the move here. We actually made a new low of the move. Now, you see what happened to Teva once it made a low of the move. And, man, the former low of the move here got a little crazy at the end of the year. Maybe some dumping for tax losses, 33.60. We are now below that level. So we'll keep that coming back on the upside. I mean, maybe if you're really looking to add this thing or cover short, maybe think about $30, a nice round number like that. You did hit 30.
Maybe.
Maybe.
I don't know. This one's ugly, too. This is one that I think is one that I'm going to have to reevaluate because it's ugly. And the way they're going down like this makes me worried about their dividend as well.
Okay.
It's got earnings. Spinner telling us it's got earnings on Wednesday there, and MYL will be interesting there. But if for whatever reason they beat and the stock goes up, and I'm just saying in a scenario analysis, I'm not saying that's going to happen. There is so much overhead supply here now in Milan. This isn't coming back here anytime soon, and especially after the Teva chart, every time this thing bounces, it's going to be sellers.
Yeah, and
Milan's ugly.
39 to 32.
Not as ugly as Teva, but it's ugly. These generic drug makers, they're all ugly. There's some ugly charts out there. I mean, you can talk about these S&Ps being resilient and, up there at the highs, but it's a stock picker's market. And, if you look back 2 years ago, all the stocks were just kind of moving together. That is definitely not the case anymore. I mean, correlations have broken down so much on so many different stocks. There's stocks making new all-time highs. There's stocks making new all-time lows. I mean, you got to be in the right stocks now. So it is what we call a stock picker's market, that you want to be, I guess, the strong get stronger and the weak get weaker. It's just what we've been saying here for the last 3 or 4 years, and just continues to happen. So, when stocks are in the doghouse, they stay there a long time. And we had Barron's chiming in here on some of these stocks here over the weekend. There was a lot of news from Barron's. I know you were saying they talked about CMG, but they were talking about a lot of other things as well, Joel. Give us some highlights from Barron's.
You know what? We got a guest coming up here in about 3 minutes. So why don't we just cover the 2 earning stocks from this morning, and then we can pick up the Barron's thing afterwards. And
Berkshire was the big one from over the weekend. So Berkshire, Spencer, do you have the Berkshire earnings? I mean, I don't know how much Berkshire earnings really matter. It is down a couple bucks in the pre-market, and it's been really running up into it. But give us the numbers there for Berk.
I'm looking for them because I know there's Berk A and Berk B, and I'm looking for them in Pro. So give me a second.
They're always confusing.
It's always confusing with Berkshire. So give me one moment on that. But didn't Tyson also report? Can we maybe do that one first?
Yeah, do Tyson.
All right, Tyson Q3 adjusted EPS of $1.28 versus $1.18. Sales of 9.85 versus 9.48 billion. So beat on the top, a beat on the bottom. They're narrowing their outlook for the fiscal year. The adjusted EPS now narrowed to $4.90 to $5.05 is the new range for the fiscal year EPS.
These food stocks are tricky. I mean, we had the first one, like I said, Mondelez, which had a good report. It popped, and then it dropped and gave it back. But then you had Kellogg's, which had a good report, and it popped, and then kept going. And then, so it's confusing. Like I don't have a tell here yet. I love it when I see a couple food stocks do the same thing, because then that's a tell for the third one. But when you get one doing the one way, one doing the other way, both on pretty good reports. Okay, Tyson's a good report here. Is it going to be the Kellogg where, gaps and goes? Or is it going to be the Mondelez where it gaps and then they fade the gap? I don't know yet. So that's why I think I sit on my hands on this one. But Joel will have some levels for us.
Yeah, what's the I see it trading at 60, 65 even. Up
it's wide. What it's only traded 6,600 shares. It is early. 64.66 to 65.45. So you're looking 3 by 1. Now it's offered at 65, just as I said that.
Okay.
But maybe 65.
Yeah, well,
I'll go look at the book. Give us some. What are you thinking?
I'm thinking that I would if I was on the stock, I'd keep a real close eye on the $65 level, because you had a pair of highs in April at 65.14 and 65.08. Big gap up to 66.87 after that. But let's see what happens at 65 and see if those sellers reemerge from those 2 days. A nice pop on that. But you can see if, in fact, you clear that, a lot of room on the upside. But 65 even is my level of the day here. I'm
going to go with you too. And the book, there's 7,600 shares only there in the book, but it's the only level that really has anything, and it's early yet. So maybe there is something at 65. So I'm going to go with that level too. I think from an order flow perspective and a technical perspective, we'll see what happens here at 65. That's an important number for the stock.
All right, 8:14 now. We're going to take our first break of the day and grab Reggie Middleton. He's a digital currency expert, the founder and CEO of Veritasium and the Boom Bust Blog, to talk to us about Bitcoin and the rest of the digital currencies. So we'll be right back. Welcome back, everyone, to Benzinga's Pre-Market Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick, and we're on the line with Reggie Middleton. He's a digital currency expert, the founder and CEO of Veritasium, and the Boom Bust blog is his blog. Reggie, how's it going today?
It's going well. Glad to be aboard. Thank you.
So it's good that we had you on today because Bitcoin hit another all-time high on Saturday. But we'll get to that. First, tell us a little bit about your background and just your history in this market.
Okay. Well, I'm an investor, a fundamental investor. I'm the type of guy that adds 1 + 1 with the expectation of 2 being on the other side of the equation. And I have a history in real assets, investing in real estate. Started in the .com days. Then from there went to real estate. From real estate, I went into a financial advisory. After selling off my portfolio right before the market crashed, I decided to start everybody who did business with me. I did relatively well for, I'd say, 6 or 7 years. And after that, I got into cryptocurrency. And I was amazed by the potential in terms of new business models that can be achieved. And I started cryptocurrencies late 2013. Created a startup that was designed to leverage smart contracts. And here we are today. I believe that we are one of the leaders in peer-to-peer capital markets. And of course, the burgeoning industry is just getting started. And the vast majority of the value capable or enabled by this technology is unseen and unknown by 99.3% of the business and financial community. And it's my job to not only educate, but to bring these products out to fore and change the world.
So what to you made the cryptocurrency market so appealing?
Well, it enables autonomy. Autonomy is basically being a sovereign self, the ability to do things on your own without the need for a third party or a sovereign or an authoritative entity. So if I wanted to do a deal with you, I can literally purchase something from you and send you compensation for it without a bank, an exchange, a broker, or an agent. You can also program these deals. So now I can send something to you contingent upon the XYZ parameters. These are smart contracts. Again, this is done without courts, judges, exchanges, etc. These conditions, these smart contracts can be very simple. I will buy the camera for you if the camera is black, to very complex, such as a derivative transaction or office park sale.
Okay, so Reggie, admittedly, I probably know less about Bitcoin and cryptocurrencies than either of the two hosts of the show, Joel or Dennis, but I want to ask you, explain just the whole cryptocurrency market to me as if I am a layman. So explain it to me like a layman. How exactly does it work?
Okay, well, to explain the whole cryptocurrency market is sort of a tall task. So I could do a better job of explaining it if we narrow it down. So,
sure. Okay. Well, then let's focus on Bitcoin. Let's focus, since Bitcoin did hit an all-time high over the weekend.
Okay. So Bitcoin is the first popular cryptocurrency. And by calling it cryptocurrency in and of itself, that's sort of a misnomer because it's more of a programmable or a digital commodity. But let's stick to cryptocurrency for right now, just as a term. What Bitcoin is with a capital B, it is a protocol-driven network, very similar to a very popular protocol-driven network, IP, or Internet Protocol. On top of that protocol-driven network, you can create applications. One application with a lowercase b is Bitcoin. And I know it's confusing, but uppercase B, Bitcoin platform, overlying platform. The lowercase b is an application, a currency application. That application rides on top of the Bitcoin platform and enables fancy things such as the ability to send money irregardless of distances, geopolitical affiliation, borders, etc., overseas. And this Bitcoin application, currency application, has its own transportation rails. So you don't need to use a bank or Western Union because the currency itself has its own means of transport. Think of a car. You buy a car. This car comes with its own roads, and these roads enable the car to go over bridges, across lakes, over rivers, across continents for a relatively small car. Okay, that makes that car very valuable relative to a car that you purchase. You have to fill with gas, you have to have a road built for it, you have to get permission, pay a toll, etc. That value, that inherent value of a car that can transport itself with its own transportation rails, is a utility value, and that is part and parcel of what makes the Bitcoin price. The other portion of Bitcoin price outside of utility value is network effect. The more people that use Bitcoin, the more valuable Bitcoin is. The more valuable Bitcoin is, the more people that use it. These two major components, these two portions are the major components of the fundamental value in terms of Bitcoin. And hopefully, over time, the fundamental value is reflected in price, which is not always the case. If it was always the case, then nobody could really make money because every purchase would be at fundamental par.
We're on the line with Reggie Middleton. He's a digital currency expert. Reggie, was trying to explain this over the weekend to a buddy of mine that's really never heard of it. And another guy that's been on the show, Jeff Goldman, was explaining to him. And one thing that I never realized about these, about Bitcoin, we'll use that in particular, is that these transactions are peer-to-peer. So when we're doing a transaction, it has to be traced, and every transaction on Bitcoin is actually verified in a ledger. So if I'm doing a transaction with Spencer, let's say, and I'm using my Bitcoin, there's very little chance for fraud, right? Because if I'm locked up in a transaction, then there's no other way that, when you have credit card fraud, they're sending out trying to do a bunch of different things. Is that one of the advantages to these cryptocurrencies that maybe is overlooked?
Yeah, well, it's basically the essence of the invention. When it was, the white paper was published by somebody with a pseudonym of Satoshi Nakamoto, he didn't bother to apply for a patent protection. If he did, that patent would have been very, very valuable because he solved from a very significant problem, and that problem was the ability to defraud somebody or mislead somebody by using a double spend solution. Double spend means I take a digital dollar, I give it to Jeff, but at the same time or shortly thereafter, I also give it to Susie in a different location. Neither Jeff nor Susie can tell that I replicated this dollar, and it was easy to replicate because it's digital. And so one of them, or potentially both of them, would be defrauded and end up not having compensation that they thought we're having. What Bitcoin allows you to do is it verifies individually each and every single transaction using something called the blockchain, which is that big network that we're discussing, the big B from Bitcoin. And once the consensus of machines that verify these transactions agree that something happened, it is the truth set in stone for everybody to see. So if I send one Bitcoin to Jeff to pay for a computer, and then I try and send one Bitcoin to Susie, the first Bitcoin is verified, it locks that value in, and then that Bitcoin is now taken out of circulation or taken from the account of the person that spent it. This means that you can have the malleability and the flexibility of sending electronic currency or payments or units of value around the world, and you never have to worry about someone double spending, fraudulent activity, etc., because you have complete transparency for anybody who has access to the internet, and you have the inability to replicate. If you look at the securities industry with hypothecation of securities, rehypothecation of securities, you have attempting to short securities without having access to the actual underlying security, and all the other potentially fraudulent but definitely market value distorting and misleading transactions. These aren't done or can't be done in a system that has a ledger that verifies consensus truth. Basically, once it's spent, you can only spend it once. So that's a long-winded way of saying yes.
Reggie, Dennis Dick here, and the technology, sounds amazing. And I'm not a Bitcoin user, but I am impressed, with the way this technology sounds and how it's safe and secure. The one thing that just gets me, and the one reason that I've not invested in something like Bitcoin is, how do I value it? Like, how do I come in and actually put a fundamental value on what a Bitcoin is worth? Because we look back and it's been an incredible run here. Now we're over $3,000. How do we actually put a pencil down and put a value on Bitcoin?
Okay. Well, if you remember when in my introduction, or shortly after my introduction, after explaining who I was, I bifurcated the value of Bitcoin in terms of utility value, what it can do and what you can do with it, and the platform or network effect or the economic platform value. Analyzing those two, coming up with an actual number, which is not that difficult. I went through a quick summary over the phone just now, is how you value Bitcoin. Bitcoin is still relatively thinly traded, and its pools of liquidity are not uniform. So there's no big uniform pool of liquidity like you have with, say, Microsoft stock via New York Stock Exchange and or NASDAQ. Not bifurcated, but this segregated liquidity hampers price discovery. But that being said, the fact that you have multiple pools of liquidity and you have a lot of speculators and more every day coming in, and they, using arbitrage, reduce the spread of X pool versus Y pool versus Z pool. And so we are over time getting one unified pool liquidity, at least in terms of pricing. Okay. When you look at it from that perspective, you have the ability for Bitcoin's price to diverge significantly from its fundamental value, as defined as network value versus utility value. And it takes less capital to distort the price of Bitcoin than it would to distort the Apple stock or Microsoft stock. So over time, the more people that come into the Bitcoin arena, the less effect this separation of liquidity pools has, and the more accurate the utility value plus economic network effect value is in determining the price of Bitcoin. Once you get to that point, it's almost as simple as a math equation, almost. Very similar to valuing Microsoft stock or Facebook stock, discounted value of expected cash flow. You could pretty much do the same thing with Bitcoin. We have a valuation framework for valuing tokens. Bitcoin, Ethereum, those are platform tokens, and as well as entity tokens, where you have an entity such as a corporation or corporation-like vehicle that issues tokens for a particular purpose. So they're not simple to value, but they can be valued using conventional valuation means. You just have to understand how the new model works, the new economic and business models work, because they're very different from what most are used to in terms of GAAP accounting. A good example is many entity tokens are not seeking GAAP profit off of the token transfers themselves, because they will make much more money by increasing the price of the token itself. So the best way to increase the price of the token for many is to get as many token users as possible. In order to do that, you drop friction and you drop transaction costs. This is good for everybody because this makes a better product for everybody. And when people use this product, then the value of the token goes up and the issuer of the token then benefits. The issuer of the token benefits as the price goes up. They want to drop prices and they want to increase functionality, which of course makes it better for all the users of the token. Then the token value goes up. Wash, rinse, repeat. This is very, very different from the typical business model and the legacy system, where you want to charge as much as possible. You want to charge as high a price as the market would bear. And as competition comes in, you drop your prices, but you only drop them as much as it takes to keep the competition at bay. So one is high friction legacy model, high friction. The new digital asset model, low friction.
Reggie, when you crunch all the numbers, though, and I mean, a lot of speculators probably aren't doing that. Well, what is the fundamental value that you come up with?
With Bitcoin, I've actually left the Bitcoin arena some time ago.
Okay.
I use it as a hedge because Bitcoin has most of the market share in terms of media attention, but it is being significantly, and I mean significantly, outpaced in terms of functionality and usability by many of the entity tokens that are now available. As a matter of fact, even the platform token, Bitcoin has a fork, which is basically a copy of it that has been improved, and that's called basically digital cash, Dash for short. And Dash is Bitcoin on steroids, and it solves most of the fundamental issues that Bitcoin has, such as governance models, because Bitcoin has no centralized governance, which is a good thing because it's very difficult for one entity to take over, but it's a bad thing when it's time to make a decision or on terms of strategic direction. So Bitcoin had a technical roadblock where it didn't scale, and it wasn't supposed to scale in the beginning. It was more of a proof of concept. As it started becoming more and more commercial, more people started coming in, the network started getting clogged. This was not an unsurmountable technical barrier because you just had guys fix it. So there were 3 or 4 or 5 or more solutions, but nobody can pick which solution to implement because there was no, firm governance structure.
All right, Reggie,
it's a smart contract.
Reggie, we're getting up against the clock here. We could probably keep you on for 2 hours, but I just got one final question for you. Blockchain technology is allowing these cryptocurrencies to flourish. There's been rumors about AMD, NVIDIA, different stocks. If you don't want to play the Bitcoin or the cryptocurrency, is there any issues you think that are better to participate by supplying the new blockchain technology? Someone asked about AMD. I just wondered if you had any translations to the U.S. stock market.
Okay. Well, AMD would be a hardware play. I think that would be inefficient in terms of value transfer from the quote unquote cryptocurrency space into the more legacy institutions. I think the more valuable play would probably be more on the business model software side. That being said, it would be pretty difficult to give a name right now without actually going into some, actual hardcore research. So I'm going to decline to do that. But I know and we'll end on this note, the overarching lesson to be had is technology never really changes industries, and technology never puts companies out of business or creates the next Googles and Facebooks. It's always the business model that's enabled by the cutting edge technology. And with that being said, if you take a look at other paradigm shifts from micro PC, from mini PC to micro PC, you have Microsoft. From micro PC to the internet, you have Google and Facebook. And now you have from the internet to consensus value transfer or the blockchain. And then you have this new raft of new companies, of which, my startup would be many, and there are quite a few. I named a couple. Bitcoin is one of the early entrants, but it is a platform and not a company per se. So even Bitcoin itself, the technology will enable a business model, and it's those newly enabled business models that will be the 100 and 1,000 times return hitter.
We've been on the line with Reggie Middleton. He's a digital currency expert and investor, founder and CEO of Veritasium, and he writes the Boom Bust blog. Reggie, thanks so much for your insights. We will make sure to have you back again soon.
You're very welcome. Glad to come back.
All right, 8:34 now. Joel, you want to just grab our next guest, Craig Johnston. He's the managing director and technical market strategist at Piper Jaffray. So we know he's got some good technical setups for us. We will be right back in a moment with Craig.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick and Spencer Israel. And Dennis, we are trying to locate Mr. Johnson here. Let's move on. We got a lot of other issues to cover.
Yeah, I want to jump in before we got to Reggie Middleton. That was great talk on Bitcoin, by the way. But Barron's has a lot of opinions here this weekend. Joel, jump out, give us the highlights. We know Barron's moves markets, so we need to know what Barron's is saying over the weekend.
All right. Well, we'll go kind of broad here with the main topic, and it was the TV sports problem. And I think it's something that we have talked about in the past, your Amazon, Facebooks, and Googles versus your traditional media outlets. And basically, what the article boiled down to is that, these startup tech companies have a huge cash flow, right? Free cash. And they're going to be able to take, bid up and cover some of these sporting events, whereas CBS, Comcast, Disney, and Fox run, a little bit more debt, less cash, and they're not going to be able to compete when these contracts come up. They mentioned Twitter too being involved in it. So it was really tech taking over TV. Spencer, what was your take on that?
My take, it wasn't, nothing in the article was new. I also read it. It actually came across my Twitter feed. It wasn't, nothing in there was new, but if you didn't know anything about this before reading this article and you read it, you would know everything about it now. It was just a really good rundown of the situation right now, right? So you've got these traditional cable carriers who are simultaneously losing subscribers on the one hand and having to pay more for content on the other hand, due to the fact that they're being bid up by Netflixes and Amazons and Twitters and Facebooks, of the world. So it's sort of like a double whammy there for kind of the big four. But the article did also break down, the timeline of events of when certain rights deals will expire, right? CBS has a little bit more leeway than like an ESPN or a Fox, but it's going to be something to watch really over the next 5-10 years. And I realize that's a long ways out, but there's a chance that these tech companies could really bid up these cable companies for these sports rights, and it's going to really cost. It already costs them a lot of money, right? And it could cost them even more while they're losing subscribers. So it's double whammy.
So did they have a trade for us? Like, did they recommend, coming in and like shorting a CBS? What did they say like about CBS on this? It sounds bearish, but did they actually put like a? It's
totally bearish. I don't think there was a trade, but Dennis, you brought up in the pre-market show something that I didn't even realize, that CBS has been on a tear, compared to its peers, and I can't.
It's held up well.
I can't for the life of me figure out why that is.
Really, like, and if you were comparing, and obviously CBS was, spun off from Viacom. I mean, you look at Viacom, and it's an absolute disaster here. Now, a little different. Obviously CBS is, the network itself here, and CBS has, like you said, these sporting contracts there that, maybe they have a little longer term here, and maybe that's what's holding them up. But I just think, I kind of agree. I think the competition in this space is going to be intense. I look at CBS trading up here at $63, which is just $6.50 off its all-time high. And I kind of think, why? Why is it still trading up here? Why has it not been hit? Why has it not been Amazoned? I don't know. So, that's why I'd be very scared on something like this too. Traditionally, CBS and Viacom have, traded very well together, but there has been a divergence here over the last couple of years, a significant divergence where Viacom has just went straight down and CBS is holding on strong. So I don't know. I'm kind of scared to own a stock like CBS as well.
Two things to add, actually. Downward Dog in the chat, sports valuations are in a bubble. I actually completely agree with that. Sports valuations are in a bubble. And, we're seeing now with this whole essentially a second industry jumping into the fray. So it would not shock me if the fees for these sports rights come crashing down in the next few years, because they have increased exponentially over the last. If you really think back to the early mid 90s when Fox kind of came into the fray and really bid up CBS and NBC for their rights and ABC. But another thing to note is that CBS does report today after the bell.
And
Okay, so that'll be a big report.
Yeah, and maybe CBS, maybe they have original content outside of sports that maybe is a little bit higher grade than some of the other networks. I really don't watch that many.
I mean, they have
that could be an argument
CSI.
too.
They got CSI and they got NCSI and any other acronym you want to come up with.
I mean, that's a big thing, and if you're producing content, you wonder, if there isn't going to be more demand for other content besides sports as well. So CBS is producing a lot of their own content, and that's something to think about too. I've always thought about something like an AMCX, like a little, network that produces a lot of good little shows. I've always, thought about investing in something like this. I haven't invested in it, but, I'm a Walking Dead fan, but, they came out with Breaking Bad. They've come out with, a lot of other good shows as well. They produce their own shows. They produce their own content. I don't know. Is there going to be a demand for stuff like that in the future? This is a little $4 or $5 billion company, something that could get swallowed up by one of the bigger guns if they're in this hunger for content, non-sports content.
One thing to note, and I'm actually looking for it right now because I don't know the answer off the top of my head, but how much CBS charges to the cable companies, right? We know ESPN is like $7, right? To basically is what it costs to get ESPN. CBS, I don't know what it is, but I have 100. It's pretty cheap, so that could be a factor. Joel, what were you gonna
I was
say?
just gonna say, with Amazon, Facebook, and Google, I mean, mobile users, if that's what they're going after. I tell you, big sporting events I don't watch on my phone unless I'm at like a wedding or some kind of commitment that I can't get out of. So,
yeah, me neither.
Yeah, so I mean, I'm still going to be like the old guy watching it on TV.
Me too.
So, it must be the mobile users that they're going after. So we'll see. I mean, they really good question. Dennis just wanted to get to the bottom line. Bullish, bearish, and you could see it's something long term. We'll see how it will play out. Moving on, the other thing Barron's was talking about, they said for Tesla, they said buy the car and not the stock. And
they don't like valuation or what?
Valuation, what Moss was originally said he was going to deliver for production, where he is currently at for production here. And they announced a proposed $1.5 billion offering of senior notes this morning in order to ramp up production. One thing now that, this is just one thing that I learned doing that interview with Gene Munster. If they could they're going to have robots putting these cars together. They're not going to be humans, and they're not going to have the same legacy and labor costs. So once they get all these robots, into gear and making things, they really might be able to start cranking out the production. So that's one thing. I mean, they say, valuation, you could always
You're going to be able to build
that.
these cars cheaper than Ford and GM. That's what Munster's arguing there?
And faster.
Wow.
Yeah,
that's something to consider. I mean, obviously Ford and GM has been, stuck under their unions there for a long time. Even when they bankrupt, General Motors, the union still stayed fairly strong throughout. There was some concessions, but I mean, that's been a concern here, especially in the big three for a long time. So that's, interesting.
Okay. All right. Craig Johnson has us coming on here at 7:45 Central, which is 8:45. So we are going to take a quick.
Now.
Yep. So we're going to go grab Craig Johnson. 3. Welcome back, traders and investors, to Benzinga's Pre-Market Prep. I'm your co-host, Joel Elconin, along with Dennis Dick, and we have Craig Johnson on the line. He's the Managing Director and Technical Market Strategist at Piper Jaffray. Craig, how you doing on this Monday morning?
I'm doing wonderful this Monday, and I'm happy to say that it looks like perhaps the 8-day winning streak in the Dow may be 9.
Maybe 9. Yeah. Well, we'll get to the S&Ps in 1 second here. We just had a long discussion here about Bitcoin and the cryptocurrencies. You've been on Wall Street, for a long time. I'm not going to ask you for any price targets from your technicians, but I mean, you've seen things like this come and go in the past. I mean, just from a Wall Street veteran, I mean, Dennis and I are hands off. We just don't understand the entire thing. Any observations you have on the Bitcoin craze?
Well, first off, I'd say that it's not a craze. And when you break apart what Bitcoin really is, it's really a combination of 3 things. It's really a combination of cryptography, public keys, private keys, which is technology that's been around for a while. Second part is it's distributed technology, meaning that it's not sitting in one central location. It's distributed out in equal copies or similar copies to many different locations. And third, it's just really about, PCs and computing. So really, Bitcoin and blockchain more specifically is just a combination of those 3 pieces. So I'm not sure that I would define Bitcoin as a craze. I would define it as perhaps a new emerging technology. Some would actually view this as a kind of the next layer for the overall. When you think about technology and the TCP, which is kind of the Internet Protocol stack, some people are calling this the next layer in that kind of TPC protocol, which would be now a transaction protocol. So I don't think it's a craze. I think it's something that has legs.
All right. And, looking at the markets here, the suppliers of the blockchain technology. I don't know if you've done any research along there, those lines, but I mean, are there any other ways to invest in the Bitcoin craze, through more conventional terms, or is it too early to determine that?
Well, right now, when I think back, having been on Wall Street since 1995, as the youngest person in research to now one of the veterans in the research department here at Piper Jaffray, I guess what I would say to you or to all the listeners here on this program is simply this: is that back before the internet really took off, everybody was scrambling to find how do you play the what was then viewed as the craze of the internet. And now you look back at the internet and you say, wow, there's very little we can now actually do without the internet. I mean, literally, we order our food on the internet. We order products on the internet. Most of the applications we use nowadays are internet-based. So there's really no pure play way to play Bitcoin or blockchain technology from a public investing perspective quite yet. I would think that most people are going to start to talk about we can play this through the picks, shovels, and axes, kind of like how people started to invest early on in the internet, meaning it was about hardware. It was about ASICs. It was about AMD. It was about NVIDIA with their cards and AMD with their cards. And it was about networking technologies, so Cisco's. And it will probably be about fiber optic companies like Ciena and some of these other companies that are really pushing the technology and really the backbone of technology so that you can actually do more of a distributed technology such as blockchain.
Craig, Dennis Dick here, and I like the analogy here of the internet, and looking back, because I went through, and I was a trader through the internet bubble and the internet burst. The one question I would have, and this is one thing I think is keeping me away from the Bitcoin and some of these digital currencies as well, is I remember everybody buying every internet stock and everything was just taking off. And when the dust settled, there was probably only 1 or 2% of all those internet companies that really survived. And obviously Amazon was the one gun to come out of it all. But, back then it looked like, every company that had, 5 employees and had a website was worth $1 billion. I mean, you look at these digital currencies and there's like 1,000 of these things. How do we know which digital currency is going to be the one that everybody goes to and then that survives? I mean, is it going to be Bitcoin, Ethereum, or, and, all these other ones that are out there? How do you pick which one's going to be the survivor?
So, well, there's 896 to be exact of these kind of digital
today until tomorrow.
Today at this point in time. But when you start reading through these various digital currencies, you start to say, this is a blockchain technology that's working on data storage. This is a blockchain technology that's working on copyright information for records and albums and those kind of things. So how do you choose and pick and decide which ones will be winners or losers? I think it's going to be similar to what you did back then, which is you played a basket of these things as they emerged. And at that point in time, you bought the basket, you played some of the pick, shovels, and axes for these kind of things, and you had kind of a combination approach. And you were hoping through that deep research, you could uncover ones that made more sense than others. And that would be how you would ultimately decide your winners and losers ultimately for which ones should be played. But let me be clear though, blockchain is more than just Bitcoin. Bitcoin is just one of the uses of blockchain technology, to be clear.
Doing a great job with this, Greg. We're getting you out of your wheelhouse a little bit, but your first statement was you're looking for another, potentially another update in the market. I just want to talk to you about, consolidation phases. And, we're basically been in 13 closes within a 6-point range in the S&Ps. I guess, the simplest way to look at it is, the trend is up, long-term trend is up, short-term trend is up here, long consolidation period. But, in order to break the trend here, we're really going to have to much lower price. Talk about how you interpret consolidation periods.
Well, when you think about markets over the long term, you can have corrections unfold 2 ways, through price or through time. And what we've really been seeing happening with this market over the last really two years, as we've seen more pauses. We've seen more time corrections where the market just goes sideways for a while and digests some of the gains that we had just seen. As I think about this market also, I would say right now, everybody is very fixated on earnings, and rightly so, regardless of the noise of what's happening with, say, North Korea, which is a serious situation, and not to, say that it's not, it is, but also to look at what's been happening with Europe and what's been happening with a lot of these emerging markets. Right now, investors are very, very fixated on earnings, and as they should. We look at right now from looking at FactSet numbers, 84% of the constituents of the S&P 500 have reported. And when you look at the results so far, 72% have posted better than expected EPS, while 70% have topped on the sales line too. So you're in a scenario where the market is fixated on earnings. Earnings are coming through. You're now looking at 10.1% for the second quarter. Coming into it, you were at 6 and change percent. So realistically, this market for the entire year is looking pretty good for $130 in earnings. If we roll this out to next year, you're probably looking at another 10% type growth, maybe you're 140, 145 with a call option that perhaps there is going to be some tax reform that gets done in Washington. And we do get some fiscal policy changes put through. So right now, this is why every little dip in this market is getting bought, is because of these reasons. Earnings are coming through, a call option on fiscal policy change. We as investors should continue to stay long this market. And might I also add, guys, that, and for the listeners too, this market has shrunk. There are 20 to 25% fewer stocks today above a 25 million market cap and a $2 price since 2000. We're also seeing for the first time an actual shrink in the number of shares outstanding for the S&P 500. So corporations haven't known what to do with their cash flow, haven't had a lot of great ideas, so they've been buying back stock at a pretty aggressive pace. And now only recently we started to see a pickup in the M&A activity, which is kind of a vote of confidence for the market at this point in time. So again, I'm not sure I'd be nervous about this tape. I think the hardest thing to do right now is to wait, sit and wait and be long this tape.
Any upside projections for the S&P? I know we had you on February, and I know you had some, that were quite well north of the market. Any other projections you'd like to share with us?
So 2 projections that I would share for you, actually 3. So the first is in terms of the S&P 500. We started out the year at 2424. Okay, and when we laid that out in November of last year, we seemed very above the overall consensus for the marketplace. We have since raised that to 2575 for this coming year, and I suspect that that may even prove to be a little bit conservative too. The second piece that I would give to you and why this market can continue to go higher. We also have seen in the jobs report last week that we have a 4.3% unemployment rate. The next couple things that we need to be watching for is we need to look for wage increases, and we ultimately need to be seeing any sort of uptick in productivity to go with those wage increases. If that does happen, the inflation expectations for the long bond or 10-year bond will start to move up, because right now you have a standoff between the Fed and the long bond. My view, though, is, and again, this is an aggressive call, but I've had it all year. I think we're going to finally reverse a 31-year downtrend in 10-year bond yields that have been in place since 1981. And we're going to see 10-year bond yield close between 3 to 3.25. Okay. Now, the third number that I would share for you is I think oil prices have gotten too low. I think you're going to start to see oil prices move up. And I think you're going to see oil prices, probably not by year end, but give me the next, say, 12 months, you're probably going to be something north of $60 for crude oil prices. And that's going to create a really great opportunity for some of these beaten up energy stocks to have a pretty nice move higher from these levels. And my observation would be right now, you have a very wide spread between the best and worst performing sector of close to 30% between tech and energy. Usually, you only do 20 to 30% spread differentials in an entire year. So I'm looking for some reversion to the mean trade, a little bit of profit taking in tech and buying of some of the most beaten up energy names as oil prices move up.
And sector rotation, once again, just why you don't see those big fallouts in the market, moving money from one place to another. Craig Johnson, he's the managing director and senior technical research analyst at Piper Jaffray. Craig, always great getting your opinions on the market. Even that Bitcoin stuff you handled great. We really appreciate it. We'll have you on again soon.
Thanks, guys. Appreciate it.
24.74 up 2 points. Dennis, we got kind of long in the tooth with our guest here, but would you just share some imbalances and we'll wrap up the show?
Same thing every day. Alibaba, 43,000 to buy. I mean, we've been talking about this for a month. Alibaba seems to have a buy and balance every single morning, so there's definitely been some trades there. Morgan Stanley, 69,000 to buy. Bank of America, 65,000 to sell. Those are two going. Oh, Bank of America just flipped to 14,000 to buy. So some of your financials are actually catching a little bit of a bid. Goldman's up a little bit. Citi's up a little bit. JP Morgan's up a little bit. And some buy and balance is backing those up as well. Jumping over here to Berkshire Hathaway, 35,000 to sell. That did report earnings. We did not get to that. It is trading down $2.50 here this morning on a slight disappointing earnings report there. It looks like from Warren. Disney House of Mouse, 37,000 to sell, although it's bid up or it was at least trading up the last trade, up 11 cents here in the pre-market. That's about it. I don't really see anything else too big jumping out at me, at least not right now.
All right, Dennis, I want you to pull up your GS chart here real quick and look at this long, torturous consolidation in trading range. 210 to 230. 210 is out of the question now, but look at that 230 area. Can Goldman Sachs clear that? I am going to put that right here at the top of my screen. That's the stock I'll be watching today. 9:03, Spencer ran a little bit over. You want to wrap up today's show? Preview tomorrow.
Yeah, we got Nick Shaheen on tomorrow. He was off last week, so we're going to get him on to get his options trades for tomorrow's show. But as for today's show, you can catch the whole thing again on our podcast, which is on iTunes, SoundCloud, and Stitcher. Just search for Benzinga or Pre-Market Prep on any of those platforms. Also, you can catch the show as it aired live on our YouTube channel right now. Go to youtube.com/Benzinga TV and subscribe to that to get alerted whenever we go live in the morning. Also, don't forget about Benzinga Pro. Get a free 2-week trial by going to pro.benzinga.com and the Benzinga FinTech Summit, bzsummit.com. That's the site for our September 28th event in San Francisco. Have a good rest of your day, everyone. We'll see you folks tomorrow.